Hello everyone, myself Vaibhav. In today's session of Visual JForex, we will get familiar with the indicator named Linear Regression Intercept. This is part of the ongoing series in which we are considering and we are trying to see the utility and how to deploy these indicators on the Visual JForex platform. And so far, we have got familiar with the linear regression indicator, linear regression angle, and now today it is the turn of the linear regression intercept. This indicator is basically the line joined by getting the individual intercept points for each data point, that is each time period point. So as you can see, this linear regression intercept indicator plots the intercept for the trend line for each data point, and then we get contiguous line. And we use this indicator kind of fairly similar to the moving averages to determine and then trade accordingly the trend of the underlying instrument. So this indicator helps us determine the trend using the prior data. So we are here using this indicator to plot the historical data to help us guide the trade actions in the future. So this is an indicator preferred over the moving averages simply because there is not much lag, the kind of lag which we experience while using the moving averages. So let us plot this on the chart to see how it is going to be useful for building an automated setup. So this is the linear regression intercept of 50 value. Let me change it to 14. 14 is mostly the default setting, default value. So as you can see, we have now plotted the linear regression intercept. I think no, we have plotted the different indicator. We need to remove this and search for the linear regression intercept. Okay, so this is our linear regression intercept indicator on the chart. Let us restore its default value to 14. Now this is the Euro USD, and as you can see, whenever the momentum is on the higher side, the price action tends to be above the linear regression intercept, as well as the linear regression values are on the rise. But as the price action changes course, we see pretty much instantly, or you can say just with a minimum lag, we see the linear regression intercept also changing course and moving in the direction of the price action. And that's why we can use this change in the course of linear regression intercept as a guiding force while determining the trend. But sometimes when the price action is in a sideways territory, we get a lot of whipsaw moves, and to avoid that we have to use other indicators in conjunction with the linear regression intercept, as you can see here. Or we can try to do some experimentation with the time period calculation. Here it is of 14. I can try, or you can try of say 21. We can try of 50, or we can try of 100. So we will have to see what is the setup, what is the time frame which will serve the purpose best, and then accordingly we have to see how to design these automated setup. The simple case, as I said, is that if the linear regression intercept values were falling earlier and now they are changing course on the higher side, we can initiate a buy trade, and vice versa. If the prior values were on the rise but now the linear regression intercept values are going down, we can initiate the sell trade. But as I said, we can also get whipsaw trades here. So the price action is basically sideways, and to minimize losses in such circumstances, we will have to use some countermeasures also. Now let us go back to the Visual JForex platform to add the indicator block and see its parameters, input parameters and then output parameters. This is the linear regression intercept indicator block. The start point can be any of the three. So here for today's setup, we rely on the on candle. Each minimum is a 10 seconds candle. So every 10 seconds, the iteration of the algorithmic setup will take place. We have to then define these input values. For whichever instrument you want to design the algorithm, you have to put that particular instrument here. Now the default instrument is Euro USD and we are not changing that for today's session. Coming to the time period of the candlestick, we have to see which is the most optimum time frame, which is the most optimum time frame for the candlestick, and then use accordingly. Now this is designed on the hourly. If you want to change it to 10 minutes, you will have the change in course of linear regression intercept, which will be lot frequent. So you have to plan accordingly. You can even do combination, like one linear regression intercept is of lower time period and one more you add to the setup, and then you keep it for the higher time period. So that way you can use even crossover kind of structures. So just like what we did in the moving averages sessions, we can here also we can use the crossover setup, and we can also continue to use uh, this indicator on its own as a guiding light for the trend, and in that scenario we can use these values, the output values, and compare the our current output values to the prior values to see if the linear regression is rising or is falling. So that way also we will get fair amount of idea whether the trend is on the bullish side or whether the trend is on the bearish side. And then, as I said, the linear regression intercept also has a lot less lag, and because of that we will be getting the entry points which will be a lot more closer to the trend initiation level. So that way we also can take care of the lag. Then coming to the time frame, the chart here, if you use 4 hourly, you will see that now the Euro USD has been in a consolidation channel for almost 2 to 3 weeks now, and as I explained earlier also, here we will see a lot of whipsaw moves, and then you have to plan accordingly. And the best case scenario is that you also use other indicator in conjunction with the linear regression intercept, or you can even use multiple linear regression intercept indicators with a different time period, and then you can do the crossover analysis or even comparison analysis. So let us add one more, and here we have this. Say for example we change it to 14, then we have this structure taking shape, and here this kind of setup where the lower time frame linear regression intercept crosses below the higher time frame linear regression intercept, that can be considered as bearish, and vice versa. Whenever the lower time frame linear regression intercept crosses above the higher time frame linear regression intercept, it can be considered bullish. So that way we can use this also whenever the price action moves far away from the linear regression intercept. That is also indicative of the fact that price action is stretched, and we can wait for consolidation to happen, and as and when the price action converges with the linear regression intercept, then we can initiate the trend depending on the break on the either side. So that way also it can be utilized. Here the time period, say for today's session we keep hourly, and then moving on to the shift. Shift is the look back period. If you want to take the current output value, then you have to use shift 0. If you want to go back in time, say by 1 hour, then the shift will be 1, and so on. Coming to the time period, it is pretty crucial while designing the algorithmic setup, and as I explained, we can use different time periods for determining the trend on the longer and on the shorter time formats, and we can even do the comparison analysis. Moving on to the output value, we get this final result of this linear regression intercept, and this is of course based on the parameters we have put in to design this block of the linear regression intercept. We have also to choose this upper side, whether we want the calculation to happen on the upper side of bid or of us. So depending on the upper side, you get a slight difference in the output value. Then coming to the applied price also carries a lot of importance, and let us change this to hourly again, and this is now the hourly time frame chart. And let us change this linear regression intercept of 20 time periods. We edit it and we use different applied price, say for example high price, then you will see that linear regression intercept will move on the higher side. Here, as you can see, the linear regression intercept has moved higher from the prior level. If we use low, it has gone a lot lower. So this way we have to see what is the, I think it has been mistakenly removed. Okay, no, it is there. So you have to see what kind of combination, what kind of setup is going to be more profitable for you. Of course, the back testing will need to be done, and even after the back testing, I would say that you should keep it running on the demo account for good enough idea, so that you get to see if the logic you have developed using these various indicators is going to work in the real time environment or not. And only after you are confident enough, you will be in a position to go ahead and deploy these indicators built on this Visual JForex platform on the live account. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. See you tomorrow. Have a fabulous day ahead. Goodbye.